Whoa, I thought you guys can hear me. Hello, hello. No, now I'm just pretending to not be heard. I actually muted my mic. What's up, you guys? All right. Up 40% in the account right now, as of yesterday's trading session, or last night's trading session. I am in 4th place in the Robbins Cup right now. It should update the leaderboard today if I don't fuck anything up. Congratulations to us. Oh yeah. Hopefully if I make a trade today, we'll see if it happens or not. Oh, occur. Some They're so funny. TD bands broke on NASDAQ. So already irrational. I'll be taking a light anyways right here. All that matters to me is I do well, show off how good we are here. But also, you know, just as a little bit of a, I have like, I can see in the light, I have like a little curly eyebrow just like poking out. Get out of the way. You know, let's like just beat the people that have been talking smack about the Robbins Cup. I'm dunking all of them, so that's good to know. Now we'll find out how long the numbers update. You should do every day, but according to Matt told me that there was like 2 or 3 days when it didn't update. So we'll figure that out. Today we had the continuing jobless claims come through. Let's pop that up and talk about that in a little bit. We had the initial jobless claims come through. Let's talk about that. Non-farm productivity and trade balance. These are a lot of things coming up. Powell's again talking apparently today. Tomorrow's huge. Tomorrow's non-farm payroll. Tomorrow's going to be a big moving day. We have to be very careful going into tomorrow's trading session. So any news this morning coming up, Renup's ECB stuff. They're not confident on inflation. Same stuff we're saying. Labor costs and lower than expected. Oh, labor costs. Where's that number at? We're about to open up. So get ready. Day. Unit labor cost. There it is. Outside of DD bands means they're trading small, trading if at all. The number coming through hot. That SPY at the top of the box. 90% on the gap up. Let's go ahead and go there. EP. Load that guy up. Hit that upper DD band. Let's see how we do. 80% DD means there's hitting the box and the market is tight there. Should I short off of DD tap? That's an easy question. I don't normally do that, but that was yesterday's trade. And there's yellow line. There's all kind of stuff just sitting here all in the same spot. Let's read it. We got a BLU. Ah, nice. So here. That's a pretty solid setup. That would be weird for it to go and keep going. Can I do a flip-flop day? Short, long, short? With a couple micros? All signs are bullish. Never short of bull market, that's for sure. Here. Expected. The problem is where it opened up is also DD. Right or break. Expected. You guys smash that like button if you don't mind, friends. Go down and get it. Go down and hit it real quick. There's all kind of juicy stuff right here though. Look at this. You got 2 red lines, a couple yellow lines. I mean, all of our resistances are like right there. Everything's really strong. My brain tells me I don't do anything. Never short bull market, Matt. Buy the dip. Signs are good. Breaking yellow line with volume, that's decent. There's these 2 red lines here. There's that impact line. We talk about those. We'll show you how these lines are calculated. All right, here's rule number 1. Never short a bull market. Don't be dumb. Here and here, this is from the other day. You see how these just tapped really close, so we still haven't hit the D-band yet. So done and done. Buy the dip. I always buy the dip in a bull market. This is still bullish. Let's take a look at some of the other stocks we have here. Actually, let's get Russell first. Friends, family, if you can hit that like button below the screen, go down to the bottom right. By the way, my name's Matt Coward. I'm the CEO of the Rocket Scooter Company. We made the next generation AI-based trading platform. I'm competing in the trading World Cup. I'm in 4th place in the world right now. Leaderboards will update today and reflect that, as long as I don't lose something and someone else gets ahead of me. We have a subscription to our platform with our awesome tools that we've made. We use an algorithm to extract useful information from the options landscape to find out how dealers and major institutions are positioned. Positional analysis is the future of markets. Quit using colorful squiggly lines in your chart to try to predict the future. Instead, look and see where people are positioned, and I'll give you a little more information. Actually, a lot more information, actual information that's useful to understand what's going on. A really kick-ass trial of that $35 a month for all of our tools is normally $100 a month. So go down to the description below, click that, check it out. Just at least check it out, and you'll learn everything we teach in a month. I guarantee you'll stay for a year. I hope you stay for a year. Because you'll learn that there's so much more in the market you didn't even think you knew. And then you spent years trying to learn stuff and nobody taught you any of this stuff. So strong enough to support. The question is, do I buy at hedge pressure? Remember, yesterday we wiggled our way through hedge pressure, dipped below, came back and rallied. I took a little $500 loss on that particular trade, and I ended up being right on the long side. Catalyst to do that. You never short a bull market, you guys. That's the rule number 1. Yeah, I can't wait to share and showcase the marketplace stuff with you guys. And it's so incredible how it's so incredible how much how every single person we're talking to, well, it's, why did it just log me out? What the heck? Okay, I'll do that. All right, hold on. I think I just logged out. One second. Don't go anywhere. Okay, let me re-log in back to the platform. I just logged out on accident. Don't go anywhere yet. So we don't short a bull market, you guys. See how it just runs and runs and runs. It may seem like you'd want to because yesterday DD band rejected, but see today it doesn't. That's why we teach you this. Once you hit DD bands, markets are what? Everyone in class, let's play a game. When you hit the DD band, the market is what? We call it, there's a name. Once you break DD band, there's a name. And once you tap DD band, something else happens from there. Markets are irrational when you break it and random when you touch it. Irrational when you break, and the moment you touch DD band, the market is random from there. Right. So we know through yesterday's particular type of trading, you may say, aha, we hit it yesterday. Let me short it because that's what happened. And then today you hit it and now it's rallying. See, the market, once you hit these spots, their day is over. The predictable trading day is over. Over here. Over. 100% over. You should never trade outside of here or outside of here. This is rule number 1 in Rocket Scooter. The day is over. If you do anything at all and you feel like you need to do something because you don't want to miss out, that it's FOMO at this point. Investments, sure. Swing traders, sure. But here we did a study to show that once you break out of these bands, and these bands are fixed every night, by the way. If you use our stuff, you'll have these bands here. Every single night they're update. So they're here and they're fixed. We did a study that showed and I'll show you guys. Actually, we'll do it in a little bit. Super fun. And let's look at monthly maps in a second. Here, it can go up, it can go sideways, it can reject. There's no pattern to that. Promise. There's no pattern up here. What I'm looking for now are signs that a short is possible. So somewhere in here, I might get a sign to short to somewhere. Usually if it's up here and I get a sign to short, which is really rare that I'm going to find one today, I will short to there and close out and call it a day. I always play against these bands like that. Shorting from the band is very hard to do because the DD rule states that if DD is greater than half, it wants to touch this upper band before the lower band, and it wants to be here. Half the time it'll rally, half the time it'll sell. If it's a coin flip at this point, I don't care to trade it. Same thing on the bottom side. In bull markets, if it's down here, I'm more likely to long the market. This being bullish here, bullish there, bullish monthly map, which by the way, let me do that for you. Okay, sorry about that, bud. You want to see the monthly maps? I'll show the monthly maps. How do you analyze the monthly maps using Rock Scooter tools? Ready for this? Again, stop using everyone out there trying to learn how to trade. Stop using your squiggly, wiggly, colorful lines, shapes, patterns, triangles, trapezoids, elephant, snake, monkey, dishwasher pattern, backflip, 360 no scope pattern. I start using things that adults use, which is just positional landscape. You will find that there are no patterns in the market. There are none. Zero patterns in stock market, guys. Zero. So don't be sold, and don't be sold magic beans. There are zero patterns in the stock market. Tell that to yourself every day that you wake up. There are no patterns in the stock market. It's a fairy tale. Your guru will not show you their 3-year broker statements, right? Because their patterns do not produce 3 years of gains. Okay, ready? Bear side sloping down. Trading must be done mostly manually using intuition, using rules, using risk management. These are the things that make a winning trader. Okay. Bear side, top of the bear side sloping down. This indicates a short squeeze is still potential there. Bull side sloping down. You see at the top, bottom of the bull side sloping down. This indicates as long as they're accumulating. Between here and here, volatility is increasing. They're pulling apart. So we can expect that the market's going to have bigger dips along the way, which is great because I'm wanting a big dip today. Take a long off of. Okay. So remember, volatility means it's at the market, all things being equal, price doesn't change, but the market has bigger V's. If the mean price stays the same, here's a period where volatility is going up. Here's a period where volatility is going down. Do we see that? So volatility has nothing to do with direction. The market has to do with the disagreements of where buyers and sellers are. And you can learn something here every day at the Rock Scooter stream. So I appreciate a subscribe, like and subscribe if you don't mind. Nasdaq future in the ticker search. Chris, so let's help you out, bud. Hold up. You go here. It is ENQ. And here's a trick for you that want to see the ticker list. Usually if you go to the risk interval DD tab, we do it. We show you the latest, we show you the front month anyways as default. So you'll see right here. It'll teach you as your ticker list is here for futures, for the ones that you should probably see. All right. Okay. So no shorting, no playing today from here. The question is, do I do anything off the bottom, off the dip? So congratulations to me. If I am, I just checked the leaderboard this morning. Oh, again, not gonna count my chickens when they hatch. According to this leaderboard here, I am in fourth. No, sorry. Did I say fourth place? Fifth place. Fifth place. Sorry. I don't know how to count. I am at 41%, give or take, right here. That's not including any trading that I'm making right now. So I will be on the leaderboards tonight. Hooray. You just signed up, Chris? Oh, awesome, man. Well, welcome. Welcome to the crew. Everybody give Chris a warm welcome. Appreciate having you here, bud. Now, again, we're going to do a lot of teaching. I promise you guys, I'm going to get back to doing Zoom calls. I know it's been kind of like hit or miss with me being able to do those since I did the futures thing. Because this marketplace and our like white label stuff is like this close to being ready to go. We're beta testing with our marketplace right now with actual live vendors. So if you're a vendor that has stuff to sell or anything in the financial space, let us know. We can feature you on our marketplace. It'll be the world's largest financial marketplace. Marketplace for financial products, the Amazon of trading. We've made that. We talk to like 2 to 3 vendors a day who are big name people, and we're just like, hey, this is what we're building, and everybody's like, how do I get in? So like I said, it's going so fast, and I can't wait to show you guys. We're making last time I took it. Oh, I wrote it in Discord. Yeah, I don't normally do overnight trading, but lately I've been having some really good pivots show up. The overnight trading is something I don't advise people to do unless you are sure you can get a trade. It was very simple. Very simple. Here's the Discord right here. I had the feeling the upper HP will act as resistance tonight. Just you'll see it open, supporting. Hold on. Upper HP will act as resistance tonight. Here. 51.13. Market bounced, went above it. Market came down. Market tapped it, and I shorted from here, and I closed here. I took this trade from here to here, and I closed out. Let me show you how that works. Y'all like that? This is an easy setup. These are the dynamic hedge pressures. So those of you that look at the overnights, there's a bot that we have a bot that here that puts these numbers out, and I'm going to start posting my charts in here as well. Every single night, there's a whole system on how overnight works. What overnight does, it uses our open interest, real-time open interest model to forecast what the landscape looks like overnight for the next morning. Gives you some pivots. These pivots are actionable. These 2 blue lines and this 1 orange line. This is monthly hedge pressure and weekly hedge pressure. What I do with those, they have been insanely accurate. And I'm going to show you what I mean accurate. I shorted exactly here. Literally, market went here, here. I went to a fucking spin class. I don't really go to spin classes that often. They don't let you take your phone in there. It's kind of sucked. So I had to put a stop loss. And then I got out of the spin class and we were here. Had made tacos. Then we were here. Market did that. I added to my short. And right here. And as soon as we had the exhaustion candle, I closed. I literally closed right at the bottom. This is a trick too that you'll learn in trading. So you guys follow me. You're going to learn all kind of pro tricks. See, a lot of times, that's a 5-minute chart. Let me open this up. You can sniff out these exhaustion candles very quickly. Is that when you're close to or near your profit target, a lot of times you're like, this is where I want to get out. You're like, this is where I want to get out of my trade. And then you're like, oh, it's just like, I missed it by like 4 points and I was greedy and missed that. No, I didn't. I got out right here. Anytime you have, like, what do you do is you look at this, and this is such a cool trick, and I'm glad you guys are here. You guys are here ready to learn. If you like what I'm teaching, please feel free to follow the stream though. We have a lot of education here. I'm winning here. So again, we dipped, we went there, I shorted here. I almost closed here, but it was far enough away for me to stay in. So instead I waited for that. I shorted one more. I shorted more. And it fell to right here. This is your exhaustion candle. What you do is you can draw 2 lines on your volume. Okay. About the average volume, just kind of like here. And then you kind of draw what your peaks are. Okay. When you get a candle, like by rule of thumb, that's like double the size of your peaks and maybe quadruple the size of your averages, typically exhaustion candles. And if there's no news or anything that comes with it, And that's exactly right. Now this is at 2030, which is about 8:30 Central. If you don't pay attention to the global clock, this is about the time that the Chinese markets open. So when other markets open, we'll move according to how their markets tend to fly. Now at 1900, why is there volume here? Well, this is when Japan usually opens, right? So no, overnight, when you're overnight, you have to understand why things pivot. There's your Japanese open, your Chinese open, right? So the market exhausted. There's an exhaustion candle right at the open of another market. Let's go ahead and close out. Easy as that. I literally shorted here and covered there. Isn't that cool? That's literally the high and the low. Pretty nice, right? That's it. Pretty simple setup. It's a commit trade, so that it was about a 2.5 to 1 trade. Yeah, it was completely set up. Where did I find the past training sessions for futures? Pretty much the entirety of our training period kind of revolves around futures because it's the easiest thing to teach. So if you go up to the Rocket Scooter website, those of you new folks, by the way, everyone, I want you guys to check out our program. The best $35 you'll ever spend, this stock market wise. You spend a month here, you will learn so much about the market, things I just taught you. Here, you log in, you go to courses. This right here are our courses. It goes into everything I do. How to use the platform, entry rules, exit rules, risk management rules, extra considerations, futures stuff, and then our other futures courses we did, our futures masterclass. I haven't uploaded yet. I need to do that this week. Advanced concepts, some trade reviews, etc. So in our website, you're gonna have a huge array of courses, number one. Number two is in our Discord, you'll also have an array of courses as well. If you go down to, there's like, what's that like? Training here, start training here, yeah. Wait, are you Jack or Matt? I'm Matt. Wait, who said Jack? My name's Matt. M-A-T-T. What's up, hashtag? Good morning, everybody. If you don't mind subscribing to the stream, give us some love. Was there something that you saw to gave you confidence that the upper band is resistance? No. That's the that is the rule. So I'm sorry. You're right. Hold on. I skipped a part. NASDAQ. You're right. It opened in the middle, right? Okay. NASDAQ. That was why. Sorry about that. Oh, Jack is a leaderboard. Oh. When the leaderboard should update tonight. Good question. And so the reason was because NASDAQ opened below it. I thought it did. No, it didn't. Never mind. I thought it did. What was either case? If you open down in here, it's a short from there. It's a double down from there. These are your pivots. If you open below here to there or there to there. If you open above, it's the same thing. There to there, there to there. Those are pivots to day trade off of. If you open in the middle, it's pretty much a coin flip. Clearly, this is a long up, like in the liquidity maps, the same thing. This is a long up. We open up with the BLU today, right? So it's showing you that you're opening above possible hedge pressure, well, possible long up. And so, again, oh, this is why I can't remember. Sorry, I had a long night. I'm like, what made me want to short it? That's right. It opened that's right. It opened above and broke below. That's why. we closed pretty much right here at it, and I said it's almost gonna be a toss-up, but I feel like this would be resistance today. The market sold off with some pretty heavy news. Yesterday's price action was like trying to breed volatility, and VIX was actually trading up overnight, which led to some suspicion that we probably would trade off short overnight, but I wasn't shorting, you know, to have the market like die on me. But this like congestion of volatility and the March triple B being close told me that we're probably going to at least tap triple B. So the market would have some downside. So when the market opened, it literally just started going down. Yesterday's action was very weird, right? We had the bank thing, right? Caused some movement. But this right here, like, it was like the market was trying to fall, but you had like the bull market and the delta and stuff keeping the market floating. The market's still very bullish today. So it was just like a suspicion that, okay, we might have more downside before up. Can you just load up? These platforms are so old. Dinosaurs. I'm not getting a not connected to futures account. Chris, you need to sign up for futures, Chris. If you just started today, you need to sign up for futures account. We have a couple of brokers there. Edge Clear, GFF. About to get AMP on there. We're working on that. So if you have a CQG account, Chris, here, this is just suspicious, and we were this is suspicious. Well, my brain told me we're gonna run and tap that. We're so close. The VIX is probably gonna make a run, and therefore the market's gonna become very volatile. And then the first exhaustion candle I'm gonna close out, which I did right here. No, here. Sorry, here. Okay. So it was a toss-up. So basically, like in the middle of where those pivots were, I could either long shorted from there or long from there, and it's like a 50-50 shot when you're in the middle. It's like a mean reversion, anyways. Chris, did that help you out? Yeah, you got to sign up for a CQG account. If you call Edge Clear, they'll get you set right up. That's who I use, Edge Clear. I love the guys over there. Yo, okay, we'll see. You know, here's the thing with the contest also. What's neat and what's not neat. Let's talk about a couple of things. The neat thing is that right now I'm sitting right at like 40-something%, 40 and some change. So I'm here. When they update today, this update yesterday. Number two is this guy has been consistent. So this, like, and what's funny is that all the like gurus out there that were like, I'm entering the Robbins Cup, I'm gonna go, you go, I go, and none of them really did or showing up here. A lot of them Photoshop their name on. There's another thing too, just for clout, I guess. Some of them Photoshop their name over Kelly's, and we're like, look at me in first place. Like, you are such a weird and like immoral, dishonest person to do that. Why would you Photoshop your name over a winner just to get clout on Twitter and people come there and say, hey, by the way, you're not on the leaderboard. I saw so many people doing that to get follows. Like, look at me, 600 points. And like, it's like, if my name's in first place and you Photoshop your name over my name, my lawyers will be calling your lawyer the next morning. So that's just weird to do that, number one. But anyways, Kelly has been in first place and been consistent from the start. This is the real opponent, not your Twitter guru. This guy is good. I've been watching his stats. I'm a little scared of Mr. Kelly, Mike Wallace over here. And I'm not sure who this is. This person popped up very rapidly at the top, but Kelly's been very consistent. He's not had any drawdown, which scares me. There's a good trader on the board. This is nice to see. This person's new. This person's been there for a while. Ivan's been doing pretty well, and Jack's been there for a while as well. So these folks are consistent. Now, we don't know their style of trading. They could be bull side trading only. They could have, who knows if they have good or terrible risk management when the market does turn around and draw down. The first big nasty sell-off day could scrape all of them. They could be great on both sides of the market. But in this bull market, those guys have been consistent. So why is your name Jack on Robbins Cup? I don't understand what you're saying, Jesus. My name's not Jack. Talking about why not chart on TradingView versus using Thinkorswim? I have no idea. Jesus, I have no idea why you keep saying that. My name is not Jack on the Robin's cap. Weird. Why not chart on TradingView versus using Thinkorswim? Yeah, I think it's just habit. Because mostly because Thinkorswim is where my repository of yellow lines are, and I kind of just stayed with it. Question is what I want to do from here. Do I want to long from here? It would be scale back to there. Yeah, Jesus, the standings haven't updated yet. They update at the end of the day. So I made my trading session, quote unquote, this morning. Last night's trading session is today's morning, according to futures. Right? The futures morning starts at 6 p.m. the previous day, Eastern. So today's update will have me there. Do I ever trade gold? I don't trade many commodities anymore. For the sole reason that commodities like gold and oil, I started off as an oil trader and I was pretty successful with that. But once I moved to equities, it was a no-brainer to stay there. Equities are more robust. They have fewer market-changing catalysts that are unpredictable. Things like commodities, they're much more complicated. If you have to learn a list of like this many things to trade S&P, right here, unless you S&P, I'm gonna put an order of hardness. S&P and Russell are like a list like that. NASDAQ is slightly more things you need to know. By the way, I can teach you guys why that is later. And commodities are just like any commodity, which is like a tangible thing you can hold in your hand. It's not like a financial asset class or financial derivative, like index or treasury futures. Commodities have so many different single news points you wouldn't know that are weird. Like an example is a commodity like oil. How many oil producing countries are there? Many dozens of them that produce a lot of oil. So any one of those countries, while you're sleeping around the clock, you go to bed probably here and you probably wake up there. Maybe some of you here. Okay. Anytime you're sleeping, pick a country. Pick any country out there. Russia, Nigeria, Iran, Saudi Arabia could have some kind of thing happen that oil goes overnight. One country, one thing while you're sleeping. Single point catalyst, what I call them. The Saudi prince could tweet something. A plant or a tank can explode in Nigeria. Just weird things can happen. And all of a sudden, Venezuela could, I don't know, political unrest in the country and people are in the streets. I'm just making things up. None of these things are actually happening. God forbid. But like those things, and you wake up and your oil trade is like that. And you're like, what the heck? So essentially with commodities, you have to pay attention to the area of the world at which, they're produced or mined or whatever. And therefore, you must be an expert at that thing in all those countries. And not only understand that, but understand the geopolitical climate as well as how their currency is doing. There's many parts of the world, like Saudi Arabia, for instance, oil is practically their currency. It's like the standard for what value is there in price of oil. So it's like, if there's inflation there and all kind of other things, it's a very complicated. Well, I'm saying it's complicated. When you're trading like equity products in the US, your news is pretty much locked into like 9 to 4, right? The news events come out like 30 minutes from the market opens, 4 o'clock market closes, and you're good. Sometimes you have earnings within an hour, but thankfully for you, very few things happen to the S&P while you're sleeping, which is great. Does that make sense, Connor? It's so much easier to trade index products or US stocks when you live in the US because you're not constantly listening to the world. You're not constantly studying that one thing. Gold, you have to constantly study gold. Who mines it? Who produces it? Who ships it? What are the geopolitical effects of it? Where is it acting as a currency? Does its value change when other people are having problems in the world? It becomes a very complicated thing to trade a commodity. And this is why like retail traders get it backwards. There are people that make an entire career trading just oil, just gold. Their entire job is to know and study that one thing. They put hours, days of research into that one thing. And people like retail traders come here and go, should I trade oil today, gold today, natural gas today? And the reason you're getting smoked is because to trade a commodity, you must have a team of experts studying every facet of that commodity. So do I ever trade gold on a technical basis, which is to what we're traditionally doing, or positional basis when we look at charts? The answer is, when the S&P is so much easier to understand, there's no reason why I would trade something that's harder or have more variables, which is why I've never touched Bitcoin. Does that make sense, Connor? Hopefully that answers your question. To me, I'm taking the thing that has the fewest amount of variables, the easiest amount of variables to understand, and the smallest time frame of variability, and the price connection to like when I'm trading this thing. And so the idea is that it makes more sense just to stick to something that's easier to understand when I'm just looking at positional dynamics, because those things that I mentioned about like oil as an example would be catalysts, right? And so with the S&P, how many times, let's say everybody type in chat, how many times like a week does the S&P have a random catalyst that pops up? That's not on the calendar, right? We know the CPIs and the GDPs and all that, they're on the calendar. We know when they're coming. But how many times have you been trading the S&P and all of a sudden it's zip, zip out of nowhere? Like yesterday was an example of a random catalyst, right? Announcement, bank is seeking $1 million bailout. Oh crap. It's a penny stock that was worth $3 dropped down to $1.80, right? So what do you say? About S&P has a random catalyst maybe like once a month, if not that, maybe less. A random thing that just comes out of nowhere. Now, when Trump was president, one of those catalysts would come out like once a week though. So a lot of that has to do with with the volatility of your president, I guess, and their Twitter account. With Biden is so benign that I don't think he's tweeted one, or the White House, he doesn't tweet, but the White House tweet or the POTUS tweet has ever tweeted something that's moving the market. With Trump, it used to be a weekly thing, and I'm not kidding. It was like, trade war with China, just kidding. Trade war with China, just kidding. Visiting North Korea. You know, it's like all these things are happening, and then we're just like, market's like, and Biden, it's like, stock market doesn't even think he's really there. Behind that Twitter account, it's like 99.99% accurate. It's someone else tweeting, and it's very benign. It's not really shocking the market. So a lot of that has to do with like random one-offs you can predict. These last 4 years have been kind of like, we've been very benign on the global scene, I'd say. Not causing like trade issues or like financially, right? We're not causing like big things. We're all still in that recover from COVID phase right now. So everybody's, you know, all eyes in the world are on the same thing, you know, inflation's high, the economies are healing since COVID, blah, blah, blah. So that's kind of been like why the last 4 years of trading have been pretty easy. Is there a way to get liquidity map, bull and bear zones to print on the ES and CL charts or here? Absolutely not. Because let me teach you about this. Because they are not calculated with futures. What the heck? That is a weird sound I've never heard before. I was like, ding dong. Okay. Liquidity maps are calculated in equities with equity options, just like DD bands are calculated in futures with futures margin requirements. So liquidity maps don't exist for futures. They could, I guess, we can make them out of futures options if we wanted to, but we choose not to because the equities are so much more liquid. Now, one can say that, why don't I take this and print an equivalent here in futures? Let me test you, and if you know the answer, don't blurt it out. Could I do that? Is that so? What you're, first of all, Makesh, great question. I love it when people ask that question. So could I draw an effect HP? I'm gonna put effective, right? I'm gonna take this one and convert it to a futures value. Do you understand so far? That is possible, but they're calculated with equity, so they exist only here. Could I convert this to a value in futures? Absolutely. But tell me what the problem would be by me drawing a line on here. We'll call it effective. So we're going to convert it from equity. So right, we take like, let's say an example, SPY hedge pressure. SPY, value divided by ES value to give you a ratio, right? Equals SPY hedge pressure. We're going to do a little cross multiplying here. And we're going to convert to X, which is an effective hedge pressure. Doesn't reflect the true opposite positioning in futures via that. Yes, number one is that's correct. So now he's actually giving the real answer is that this does not reflect the options positioning in futures. So number one, it would just correct. We can do a liquidity map on futures options. The futures options are like they're just, they don't exist. They're not like big chunks of options like in equities. You know, you have big areas of interest, right? Futures options are so like, it's like a barren wasteland out there. It's not liquid enough to have usable data that falls outside the noise to be confident. So that is the real reason, right? It's just there's not enough of them to really trust that this number gives you any actionable pivots. These are so strong, they overwhelm everything. But the real reason it's not actually done, because even despite that, it'd be confusing because you'd think it'd be calculated here. But you as a trader wouldn't care about that. Just, you would say, oh, there's the pivot to trade. Somebody like me would be like, oh, okay, well, that's not based off of futures. We'd have to call it hedge pressure equities. But the real reason it doesn't convert is that because this ratio is never the same. You may say, let's flip it around. ES over SPY is what? What's the ratio between ES and SPY? It's 10. Ish. About 10, as Lee has nailed it. It changes in real time. It's 10, it's 10.01, 9.999, 10.120, whatever. Because the S&P and futures version of it don't trade tick for tick. They have their own independent supply and demand. So because when they do that, your conversion, hedge pressure will bounce around. Which is that's a good and bad thing. Your hedge pressure would do this. Like every time that the candles would update. Watch my screen. This would happen. You see that, Mukesh? So explaining that to a new trader would be very hard. Right out the door. They'd be like, why are your pivots booted ground? Is my YouTube feed limited to 1080p? I only stream in 1080p. I could, I mean, I have a 4K streaming setup. I just haven't done it. Do you want me to stream in higher resolution? I mean, I built like a supercomputer to be able to stream in 4K. I have 4K capture card, I have everything. I just don't ever do it. I don't know if I can do it. I could try. So the idea, well, maybe that'd be okay with new candle data. Let me sack with the current candle data. Yeah, yeah, maybe the 5%. Lee is right. Maybe the 5% market volume candle won't dance around too much. But the idea that it dances around makes it harder to trade. Conversely, if we were to take DD band and convert it to SPY, the DD bands would also dance around. So to have it all in one chart, we'd be like, okay, that'd be kind of cool to have in one chart. The thing is that we put walls and hedge pressure and redistribution zone on here. All of your things are like dancing around. So if you're looking for levels in ES, how do you make a determination for targets? You look at one and trade the other. You put them side by side like I do. So you treat them like they're two separate things. And I know it's, and again, this is breaking old habits that you guys are taught when you're learning technical analysis. Technical analysis is like the art form of getting a chart and cramming as much shit onto it as you can to get analysis of the market, right? We've all learned that when you're learning TA, that's kind of what you do. Everybody's saying like, Matt, what kind of trade are you going to make today? Matt, when it's along off a hedge pressure from here to here, I'm no longer going to do that because this is pretty much that trade. Remember, irrational markets, things tend to like cut early, pivots overshoot, undershoot, and you get a little extra volatility. The dip to hedge pressure, I'm going to assume that that's pretty much it. This bull long up V-shaped trade, this is it. So I don't think I'm going to take that anymore. I don't think I'm going to call it a day. So the idea, and we'll just hope 42 per 40 whatever percent it is will give me on leaderboard today. Yeah, so like the EMT will draw it on there and it's just an estimate at that point. Let me see if I got my... liquidity maps for NASDAQ. Hold on. Is it normal? I'm getting just a B in the liquidity map for NASDAQ. That's not normal. All letters should be there. If you're getting a B, it's because you don't have the other things drawn up. Are you using QQQ, Chris? Refresh your platform. It shouldn't be like that at all. So the idea, let me tell you guys, we have a solution though, Makesh. You ready for this? We have a solution to your problem. How do we get it all in one chart? So remember, the idea of like technical analysis is cram everything on the one chart. It makes it, when this kind of analysis is positional risk, we're looking at positions. It's not like a level based on price action. See, like levels based on price action are fixed because the candle data in the past is fixed. What we're doing is we're looking at positions in SPY, which are fixed here, and positions in futures, which are fixed here. To cram them together, you must convert, and so the converted values always dance. Now, one can say that where is SPY here, and then I can just draw the line at SPY here. But the thing is that you can't do that because if this were to fall exactly there, you might overshoot or undershoot your pivot because you don't know what the value of ES would be when SPY is there because they trade off out of sync a little bit. So just a little bit of significant, there's a significant error to having it there. It's not a lot, but it's definitely worth noting that the targets are going to dance around. And really what you want to know is when you get close to it, what is the value? So the solution we actually have, we just haven't done this yet with all the other things on our plate. We have a solution to get all in one chart. The current way to do it is just to put them side by side. You watch one, trade the other, or you estimate like some of the folks here do, knowing that they're going to move around. So if you want to be conservative, if the answer you calculate in a cross multiplication is here at 5131, then understand that deviation is definitely no more than 1%. So you know that, probably even 0.1%, that a lot of people will just add some fat to it arbitrarily and leave it there to cover it. Like what's the highest possible case? So imagine we're above it and you want to convert, and your conversion target right now came up with this number. Like you converted that to here, that's that number. People will just take this and just drag it up, like, 0.1% or something, and leave it there to cover for the fact that it is dancing. Same thing. If you're below it, people will add some fat to it just to cover the fact that it's dancing and use it as an estimate. Exactly right, Makesh. So that's basically it. If SPY is here, then you go here and make your trade. Easy as that. CJ, Chris, did it work? Cool, brother. Gotcha. Figured that would help. You probably just timed out at the start of the day. You might have logged yourself out trying to go in and sign up for your futures account earlier. I think that was you doing that. So yeah, so you just watch one and do the other. So that's exactly what you watch me do on the stream. When this falls and hits here, I just go in here and push the button and trade. Pretty much it. So another thing to note is that we will solve the problem by having the converted values here. So essentially what happens is every single time the candle updates in futures, okay, I'm just going to mimic what you see. This is going to dance around. So what we did was, if this updates every time that updates is what happens with the chart, then we write some code to limit how many times this updates to where it only updates when you're close to it. Say that it does a conversion here and it's just an estimate. Say that it just stays there and it doesn't matter. But as price gets closer to this, it'll start updating more frequently. And then when you're right up within a certain vicinity, then it'll update and start dancing in real time. So should everything else on your chart would be static, Like say you had a bunch of lines here. Okay. It would be weird to see all these lines dancing around in real time, like that one and this one. But the idea is that the farther you away for a line, the less it's going to update. And that's the trick. So pretend that hedge pressure was right here and price is there. These are going to be static. But pretend hedge pressure is right there. It's going to update every 5 seconds. Say the hedge pressure is like literally here. It's going to update every tick. And then these are going to be still because they're so far away. And that's the trick. To only have the things that dance around from conversion, well, the polling at which that equation pulls data will slow down the farther away you are. So like the closer you are to price in an axis like this, every tick, it'll update. Further away you are, like 5 seconds here, 30 seconds, it'll be like a logarithmic chart. So like on a graph. Let me do it this way, sorry. So like this is how close you are, like at the price. And then probably about 1% away or more, it'll be here. So like this is time. So this would be like once a minute. So like if you're 1% away, it'll update once a minute. The closer you are, this kind of logarithmic chart, the faster it'll update. Like when you get up to price, it'll very, very, very rapidly update. And so that means it'll only dance when you're near it. And everything else will just update once a minute. This might shift a little bit. That way your eyeball's not staring at a bunch of updating charts. So that was my mathematical solution to this. Could be right, could be wrong, who knows. I love you guys. Welcome to the stream. I love y'all. But the jumping would be due to the mechanism used to place it on the ES chart. Yeah, the jumping has to do with the fact that the S&P and the futures, SPY and futures aren't trading at a 10-to-1 ratio because they're two independently traded things. SPY may move up. Look, you can just look right here. This had a candle that was like so many ticks size-wise. This one was like the charts, even historically on the charts, they look similar, but they're not necessarily exactly the same. You can see very small differences between the two because they trade differently. This is designed to price itself, and this is designed to price itself based on the SPX, but they have their own independent supply and demand despite the idea that they're both trying to equal the S&P, right? So people might just be buying futures and it might put, look, this has a big candle, this has a smaller candle. This guy is a red candle with a wick. This one is a green candle. They're slightly different. Because they're slightly different, the MT, that's why they dance around. This one has a giant wick. This is a tiny wick. It's not the size it matters, it's the motion in the ocean. But either way, in the charts, it matters. And that's why it will like dance around a little bit. Love you guys. Y'all make my day awesome. Y'all actually make life really fun for me. I love hanging out with y'all in the morning. The jumping has to do with the mechanism of the fact that the two aren't perfectly aligned with each other. The S&P, to convert one to the other, if they were exactly pegged to each other, they wouldn't dance around, because SPY has its own supply and demand and S&P has its own supply and demand. They're going to bounce around differently. Even MES futures and EP futures don't go tick for tick. Like, look, if I open up EP, look, that red candle that we showed right here that was red with a wick, many futures are green with a wick. See, not even futures amongst themselves are the same. You'll see this one. This is that candle I was talking about. Like here, this one's red with a wick. So even internally, anything that tracks something else but can trade on its own is not going to be 100% like tethered on par. They're going to be slightly different. And so because of that, anytime you convert one to the other, they're going to dance around. Thank you guys well on the stream. It's your first day here. Feel free to say hello. It's my first day here. Introduce yourself. You know, my name's Matt. I'm CEO of Rocket Scooter. So I have to give you theatrics. I'm a trader. I've been trading since 2010. I'm a former chemical engineer. So my background's in engineering. There's a Graduation with honors right there. It's an engineering degree. I considered med school to go become a pediatric neurosurgeon, but I ended up just going to become an engineer with my first degree. So I had so many paths for myself. I didn't know what I was going to do. Been coding since I was 12 as a hobby. I wrote Pac-Man as one of my first things I created in my coding projects for fun. And I was always a hobbyist coder. So when I got older, I started getting commodities trading. Then I moved into equities trading. And then I created a trading platform for you guys. You may not think from how cool I seem on stream that I'm a genuine certified math nerd deluxe. When do you decide to take a short back to DD band? I don't. Unless there is a thing to short off of somewhere. I look everywhere else. NASDAQ has nothing to short off of that I can see right now. IWM. I very rarely will short back to DD band unless I see something to short off of. IWM belong up. Let's go to futures. Do we see anything? We need a, remember, when you short, you always short off of something. You need a pivot somewhere. There is no pivots in Russell that I can see. I don't do red lines, yellow lines, everything I should. NASDAQ is hitting yellow line. If there is a short, here is a short target to short off of. Do you guys see how the NASDAQ yellow line was this morning's short target? So if I were going to short in the S&P, that would have been it. So I look for some, you see how accurate this was? One of our yellow lines, one of our things that you'll learn in our videos, yellow line is how to calculate this. That was a pivot and I just ignored it. So this is a potential short setup from here to there, which it already took place. I just didn't do it. Good question though. You need something to short off of. And so outside of DD bands, we always teach you that illiquidity pivots are your short targets. So now that yellow is probably off of the question, pretend that you are going to make a short in the S&P. Do we have anything outside the bands? We don't. We have nothing, right? So see what you guys can guess really quick before I give you the answer. If I were to short somewhere on the S&P back to DD band, what would I do? How would I short the S&P? This is a very advanced question, by the way. The clues, you must look elsewhere. Good question. What would you guys do? If I were to pick a short arbitrarily in the 51, 60, 70s, and 80s to short back to DD band, what would I short? What would I look at to tell me when to pull the trigger on the S&P? The clues are all... Oh, you can't see because of my... Yeah, you can say it. Yeah, maybe I'd use the bull zone bottom rule. I'd look for some volatility. Yes. Is the NASDAQ offering any clues of some short side setups? You can't use resilience because it's irrational. Right. You can't use resilience because it's irrational. If resilience goes negative, though, in general, I might take a short. But what about if NASDAQ rallies to here? Illiquidity pivots, you have a pretty equal chance that this happens rather than that happens. So this leg of NASDAQ, the minute NASDAQ hits red line, I might pull the trigger on a short in the S&P and short it right to there. You see how that works? That's why it's advanced. By proxy, NASDAQ has a possible pivot here. Possible. Does everyone see this? What if NASDAQ rallies to there? There's a possible commit the trade to short it back to there with a stop. It's a very risky trade to take, but it's definitely there. Do y'all see that? When trading the indices, when you're trading one, you look for clues in the other. Case in point, NASDAQ, this one took place, so the S&P pivoted at exactly that same spot. If I want to trade the NASDAQ from here to here, I'd trade the NASDAQ from there to there. If I want to trade the S&P, I'd short the S&P while watching the NASDAQ. When these things pivot, they tend to go hand in hand. You see that? NASDAQ influenced this. Yeah, no trades today, Josh. We open up irrational, so I'm waiting to see if there's anything. If there's anything, this is potentially a resistance point. That's potentially a resistance point. You'll see that. So by proxy, the S&P could pivot each one of those times NASDAQ pivots. Going to scalp some pennies on the way up, I can trade. Each time you hit these, they will be some resistance. It may not be a reversal. It may just be a little bit before it goes. So illiquidity pivots in one index are always illiquidity pivots in the others. So and again, we can't convert this to that because they're different instruments. But once this gets here, wherever this is, I might pull the trigger on a short. And then there's your commit to trade. Remember, you're random outside of DD bands. Random. So it's like every pivot could be 50-50. This time it bounced, this time it's breaking. Right? So it's like, but there's no argument that these are high volume predictable pivots. Look at this. Our yellow line technique is one of the best techniques in futures. Nobody has done anything close to this. So, take your futures pattern charts and throw them in the garbage. This is a predictable high volume node that we calculate using margin requirements. This is next level stuff. This is real math, by the way. This is calculated from months ago and it's just been sitting there. Let's calculate one in real time. Let's see if ES has any that we're missing. I'll show you this technique. We do need some upside yellows outside of here. We call them illiquidity pivots. So this is why I've been using Thinkorswim, because all of them are there. Oh, we do have one. My bad. First thing we always do is double check from Rocket Scooter to make sure that right here, yellow lines are presented here. Get you guys out really quick. I love hanging out with you on the mornings. Let's find S&P. 257.4. All right, let's go back to here. Double check that. 257.4. Is it really 257.4? I love this song. Okay. So it looks like I need to change the size of this. 257.4. Wait, actually, no. 7 and 7 is 14. With your 1. No, that's 257.4. That's the right size. Okay. All right. I don't need to change that. So I think this started there, but let's go back and make sure I remember where that started. This is a trick. We have videos on this, you guys, and we'll teach you how this works. It's fun. There. I think that was the one. I love this technique. Yeah, it's definitely here. Okay. Okay. So that's because I know what I marked that red line. Okay, so we're gonna zoom all out. And then what I do is I'm gonna draw this for you, and then there is your next target to the upside. Here she is. This is a really good technique. So this is a predictable high volume pivot at highs. So from here, we'll round down to nearest tick. Okay, so going forward, now you have an upper target to aim for on the bull side on the way up. So any illiquidity, say that like we close here today and tomorrow we trade there and the next day we open here. That is the next big target. See how that happens? This happens. This happens. Is the title wrong in the live stream? Wow, you guys are so good at catching my little mistakes. Yeah. I changed it, Peter. I must be more thorough. Hold on, let me put on my glass. I need to read something. Thanks, Peter. Appreciate you. It's so when you record when the cup historical record here, Peter always looking out for me, my man. Always since the start. We're buds. I love you. All right, the ESYL 5322. Your screen is a little fuzzy. Can't you change your thing to 2K? Let me see if I can change it to 2K. Let me do my encoder settings. How do I? Hold on. Oh, up here. Okay. Oh, won't let me while I'm live. I can stream in 2K and 4K. You guys want me to do that? Hold on. Hold on. Don't go anywhere. Let's. You're now streaming to YouTube live in 2K. Your stage resolution has been changed to 1080p to match the event's resolution. Oh, okay. Can I stream? Maybe YouTube's limiting that. Can I stream 2K and 4K in YouTube? I'm sure I can. I have to change the live events resolution. I don't know how to. I'll have to go play with it. I can stream in 4K. It's the place I stream to that would be limiting me. Yeah, you guys would have the ability to throttle to whatever you want it to be at. So yeah, you're right, Louis. Because if anybody else is going to have that civilian bandwidth, I 100% agree. They could just change it to 1080p on their end, which would be the equivalent of that. Okay, I need to do. Oh, the video. Let me get it for you, dude. Hold up. Appreciate all the new members here. Courses. Right here. Exit rules. No liquidity pivots. You got it? It's in the exit rules category. Yep, I got you. Oh, here we go. What am I gonna do? Should I see? Like I said, a long is good from here. Nasdaq hitting. You guys want me to take a stab at it? At the red line at Nasdaq to show you how it works? Let me throw some micros at it. Every time I trade the Nasdaq, instant regret. 18,272.66. Instant regret. It's definitely going to 294 today. So let's hit the upper pivot. So irrational. So with Nasdaq, right, we're looking at this, right? VIX is in the clear. Everything's pretty cool on VIX. And by proxy, the trade would be like if this hits there, this is the run length, this is the impact. All right, they're both pivots. Make it thick. Like ourselves some. And you just fill the gap. Oh. Yeah, that's the other thing. Gap fill on Qs. Let's do that really quick. I'm so bad at doing this on Qs. I think there's so many to update my gap fills. Whoop. Good call. I'm behind. Well, I was on vacation or I was at a wedding. For like Thursday until yesterday or 2 days ago. I came back Tuesday. Yeah, you guys are right. So I get those points. Yeah, QQ just fill the gap. Bull market's still bullish, baby. Make sure to do SPY really quick. Make sure we take note of this QQQ gap fill, which is pretty much here. I don't think it's going to pivot off the gap though, but that's going to be the downside target. Good call. All right, let's do ES real quick. SPY, come on. Gap fills are always pivots worth noting. Need to catch up because I wasn't doing this. So SPY has already filled its gap and now at all-time highs again. Go SPY. A little index that could. It's not really that little, but. That's close enough. All right, so here she goes. Beautiful. Okay, so with Nasdaq, let's double check those levels. Dude, I want to short a micro just to show you. There's probably the exhaustion candle real quick. That's it. I don't even have it. I'm scared. I'm scared. I hate touching the NASDAQ. I'm scared. Let's hypothetically short. Clicked short right here on that exhaustion candle. That was it. Just for a scalp. I missed it. This goes pretty much right about here, give or take. Again, we're estimating it because we're converting it. It's about here. Gap fill. But that would be it, right? This would have been, I would have just tapped it at 68, 58, 10 points. I would have closed it. I would have been like, boop, boop, got in, got out. You see how there's a pivot? Like, this is the exhaustion candle that gets right up next to it. There's your big volume. And so while it didn't tap it exactly because we're irrational, we know that. We look for the candles to give us that little light. You'll see how that works. You see how there's, again, it's a small little, it would be in and out real quick. I want to be betting on reversals. If I get 10 points, I'm good. I'm happy, right? We can try to get the impact. Buy at all-time highs though. I hate shorting a bull market, but I'd throw a micro at it to show you how it worked. But that hypothetically, boom, boom, that would have been it. Does that make sense, Jesus? Double checking that I even have the current triple B number on here. I don't. What number do you have? Let's see right here, 1506. There's the close, there's the open that day. Yeah, 15.5, hold on. This was one of those weird days because it wasn't on the normal schedule because of the holiday. Oh, you did it up here? Did I do it the wrong time? Hold on. Let me find out. VIX monthly options expiration. Calendar. It was on a different day. February 14th was Valentine's Day, which was, let me do it real quick. It was Wednesday, so it was the 13th, the Tuesday before. So it's, oh, yeah. Whoa, hold on. Did I do it on the wrong day? Why did I do it there? It's here. Oh, that's probably why yours is different than mine. Truth be told, I think I accidentally might have not done it. Do you guys still have 15 3/4? I think I just copied the line from the last one and forgot to move it, or maybe I moved it and moved it back on accident. That's why I was like, that's weird, because yeah, this is it. This should be it right there. Yeah. That's so odd. Is that right? My bad. It would make sense why it was like over here somewhere. I might have just did it wrong on the wrong day. This is Wednesday. Monthly options expired Wednesday morning. Yeah, this should have been done right there. Okay, yeah, that's correct. Okay, thanks for getting it. Okay, so here's that pivot again, right? You get right up to it. Watch a NASDAQ. I love you guys. I mean, y'all really make my life fun. I really like working with y'all. Yeah, sorry about that. It's always the Tuesday night, which is the Wednesday morning session of the day that VIX options expire in monthly. So that's the monthly VIX expiration is usually the third Wednesday of the month if there's not a holiday. So the Tuesday before that. In this case, the 14th was the second Wednesday of the month because of a holiday. Or no, not a holiday because it's leap year. So usually it's the third Wednesday of the month, and then it's usually the Tuesday before the third Wednesday of the month. This year it was the second Wednesday of the month, likely because of the leap year or a holiday. There's the President's Day, I think, is the one that's in February. So this is the one weird time where it's the second Wednesday of the month where because essentially February is always the weird one because it's a shorter month. Yeah. So occasion will shift around. So this one was definitely confusing. Sorry about that. So here's that again, the pivoting resistance off of these red lines. This is McCash and those of you that are learning this. It's very important to get them correct. Do you see this pivoting action here? You see that? Everyone see that? Everyone see that? Everyone see that? It's good technique. It's really good technique. Learn it. Join our program and learn it. That could have been $1,000 for a quick scout. Look at that. Look at that. Look at that. In and out, 2 minutes. I just don't want to touch it. Like I'm trading carrot. Look, there's 20 points you just got on the NASDAQ. Look, now it's going to tap the gap. Like honestly, I'd be in, I'd be out. I'd be out right now. Boom, boom. I didn't touch it. But that's it. That's the trade. Here to gap fill. This is the pivots. You guys see it? Just drew them. I like when I draw them on the stream, talk about them, and then they happen. Everyone, please follow the stream. This is like solid gold information. It's cool. It's one thing to be like drawing shapes and colors on your stream. Like, here we go, guys. Check this out. Check this out. It's another thing to just draw a line and talk about what you're going to do. Let's add some indicators, right? Let's add like a MACD. Let's just add some stuff. Let's just go ahead and let's add some let's add some emojis. It's very important to put those on there. Let's turn this one upside down to indicate that it's a short signal. Let's go ahead and draw a couple more. Let's do some Elliott waves too. Let's go ahead and do this. Make sure this works. Yeah, let's go ahead and let's just use this, guys. This is going to tell me how the market's going to move. This is an extra good indicator. When the two emojis line up, it's certainly a good indicator. Let's go ahead and make sure that we do the three drives pattern, because you must have all three the drives. I don't know. And let's go ahead and see this. Okay. So, springtime sale, guys. Buy my emoji algorithm. Let's put some text box on there. All right, and the algorithm says say ultra combo. Have you ever played Killer Instinct? Let's make this like a video game. All right, we're cool. Let's go. Don't worry, guys. It's only one. I know I make fun of this stuff too much. I need to stop making fun of TA as much as I do. Anyways, just kidding. Jokes aside. I didn't add them. Let's add some more stuff here. The awesome oscillator. Make sure you put some chalk and oscillator. Candle crawl. Chop zone. Oh, that's weird. You know what's great about indicators? When one points down, they all point down. They all do the same thing. No, indicators are great. They help you see the market better, but this goofy stuff just is, oh my god, let's just delete this. Make people believe you actually put stuff like that in your chart. Oh my god. No, please, for the love of God. I already feel like I need to take a shower. I feel dirty. Joking aside, we're just being ultrally confident in our own style of trading. The idea is the reason that you pivot here is because there's hedging done against these illiquidity pivots, which has to do with the imbalance that created the downward move in the first place that created that pivot there. Now it's like just a simple technique and it's really effective. You cannot argue with what you just saw on the screen. Now this these were calculated back here this day. So every time you have a move, like I'll alter the upside moves from ones today. So like there's that decent short, right? So that's the one we were talking about today. So that was the short hypothetically that I was going to take. I didn't take it, but that's it. I didn't feel like touching it. So this move, we calculated them here. Let's calculate some on the way up. You guys ready to do that? Let's do the ones from today. You like how cool that move is? That could have been another couple grand on the account had I pulled the trigger there. But like I said, I'm not in the mode of playing irrational days and gambling. I'd like to hit the leaderboard today and just kind of take it safely. This was this morning. The pivot this morning. Let's do it. Okay, here's the technique. That's roughly the same size, and then that's the bigger V, and then that's a smaller V. Okay. Here. Yeah, that's definitely good. Okay. Let me just zoom out really quick. I can double check this one. So we're going to calculate some more red and yellow lines really quick. Let's do them real quick before I get out of here. Let's do the S&P as well. I'll come back and clean this one up later. It's a great technique. Yeah. 1575. Andrew, can you double check that I did that right? I don't think I did the one for March. I think I was traveling or something. I was doing something. I was. All right, let's do today. We'll call it. So it's a really good technique, you guys. I really highly encourage you to learn it. Okay. So these are going to predict high targets for the next couple of weeks, actually. Let's pull up. Let's just say that in case it goes, it keeps going. Just like the Sith, they come in twos, no more, no less. If there's an impact red, there's always a yellow. Let's do it. This is gonna be a target for like next week. There you have it, folks. Here's some more lines for you for the next weeks. Oops, did I? Oops. I should have copied the box. Let's put that box back over here. And here's the new one. And then we take these and then we cut and paste them and put them in our Discord. Sorry, take a photo of this, put in the Discord. Good practice. Route to the nearest tick to the conservative side. That'd be to the downside there. All right. And then the next one. Oh, I already did that. Hold on. Okay. And then that's it. So these will appear in the chart. In the Discord, we have a section where I actually draw them for you guys. Yeah, I'll post them later. So there's that scalp I mentioned, and that's pretty much the only trade I can see that's even visible today. I wouldn't be touching anything else, to be honest. Anyways, wish me luck. We'll see if 40% gets me on the leaderboard today. I'm gonna probably call it a day. Get out of here. Much stuff I gotta work on today. If you're a friend you know have a trading community or product or anything, we'd love to have you guys check out our marketplace. Send us a message. Our marketplace is gonna be an amazing way to get your product to market. Where do we send it and what language is it using? What do you mean what language is it using? Is it a coding language? Let me start over. Marketplace is our marketplace for all trading products, not just indicators. Sorry. To write your own indicators, it's using a coding language called RocketScript. I created a custom coding language for you to interact with the Rocket Scooter trading charts. So in its infancy, documentation is being created now for that. So F2, like you'll be able to, it'll be a JavaScript based. So it'll be very similar to, more similar to, in your list, more similar to a Pine script. Any kind of, we call them in the industry, we call it trade script. Trade script is a kind of like a coding language that's designed to interact with data manipulation functions of trading candles. If your inputs being an array of 4 data points per candle. So you build a coding language around that. So trade script, was the original one. Think Script, Pine Script, they're all very similar. Yeah. So F2, no, our technology is different. Aha, no. We don't see your code. I don't see your code. Our technology, you have a UI element called a console. It's coded on the server that only you have access to. There's a lock. It's supposed to be a lock. And the server streams with WebSocket, the output. The first industry to do this platform. We don't own the code. We don't even see the code. Nobody sees the code but you. You get your own server. Yeah. You get your own server. If Sierra writes the code to a server in a similar fashion, what we do, and automated license server and all of that is all done on the back end. So like you don't have to do anything. You go to the console, you write your code, we create a server for you, and then we stream. And then we do that here, like all of liquidity maps, resilience, all of this is done on server code. All of these are done on server and actually streamed to the platform. Yeah, so like that's why every single vendor in town is like, holy shit, this is great. Our first white label client is one of the most famous traders in trading indicators. So they understand the magnitude of what this does. Pine Script or TradingView, yeah, they secure your code, but it's sent on the browser. Thinkorswim's on the browser, everything's in the browser. Two problems with that. Yeah, TD sucks, dude. Like when it comes to that kind of stuff, you give the code away with your stuff. So like what we're doing here, the console allows you, the console is going to have two different environments. It's going to have a test environment, a live environment. You'll be able to code your code and then like test your code, and test will like bring up a chart that you can see your indicators and style on. And once you like it, you can hit deploy, and deploy will update the server code. Not telling you the tech, again, I'm leaving all the juicy patentable technologies out of here, but essentially is how it works. When you deploy it, there's an encryption, there's a layer to it, there's all kind of stuff. And then the way it interacts with the platform and you is fine. So you can go in here and tweak your own indicators on the fly. The minute you do, they update in real time to your users. To be a vendor on Rocket Scooter, you just have to apply on the platform. So what I want you to do is go to our Discord, send me a message real quick, and I'll patch you over to our team. So for the beta launch, we're kind of only selecting SU, but I've known you for a while, so I can put you in the beta group. Beta test is like a select group of vendors that are representing a whole different spread of things, like, you know, 5 to 10 indicator people, a bunch of newsletter people, like, again, but I'll add you to the group. So the idea with this technology, there's two things that happen. Number one is you have a coding environment that's secure, where you get to log into your server remotely through the console, which is great. Second thing is not even I have access to the console. It's encrypted and only you have access. So that's, again, this is all of our patentable stuff. The next thing is that you have the ability to change on the fly. Your users get the update on the, you click deploy, the indicator immediately changes on the fly. They don't have to reset or reboot. The last thing is of being on the server is that you can add 40 indicators to the chart, and then the browser doesn't bog down because the limiting factor is the internet speed, not the computer process. How many people out there like do NinjaTrader? And I hate beating up on NinjaTrader every day, but it is a dinosaur with 3 broken legs, and it's a great platform. It was a great platform when it, you know, hit its heyday like 15 years ago. Problem with NinjaTrader is everything's done. There's a license server that's done on the front end. You have to give everyone your license, take it away. It's all manual. Ugh. Number 2 is And ours is automated, by the way. Customer buys the product, the license is given, it's done. Customer buys the product, Discord roles are given to them, done. It's all done with bots and it's all automated. So you never have to fumble or mess with the client ever again. NinjaTrader lacks too much because those calculations are done on the front end. And it's like not even a multi-threaded application. So it can't, it's like, it literally does the calculations like in a single line. And it just, that's why it logs up. The more you add on, the more it slows down. So like people that buy indicators on the NinjaTrader ecosystem, the problem they face is their guru spends so much time trying to convince them, update your computer. You need a fast computer to be able to run this. The more complicated the indicator is, the better your computer needs to be. But see, the thing is that the indicators here are not calculated by your computer. If you can stream a YouTube stream to you, you can stream one array of data that just draws a line on your chart. So these indicators are streamed just like this video that you're watching right now. As long as you've got internet, everybody has the same experience, and that's the best part of putting on the server. It's a little bit more expensive on our end to do it because we pay for server hosting fees for all of our vendors. However, the flexibility is infinite. And also, unlike TradingView, we don't lock your users to a second subscription just to be able to show the stuff. We give multi-charts, multi-indicators away with our base paid package. So you can do as much as you can. And you have unlimited outputs as a vendor because like on TradingView, they also don't allow you to have unlimited outputs and an indicator you host in their marketplace because of that particular phenomenon. If you start doing infinite outputs, like you have 50 indicators or 50 outputs on one indicator, the TradingView browser will start locking up and slowing down. So they limit you as a creator on their platform. You can only have so many outputs with one indicator. So then that limits you as a creator. We've removed all those limits. So like when we present this to our vendors, everybody goes, holy shit, you solved every problem I have everywhere. So we have unlimited outputs. Your indicator can have 6,000 signals if you want, and it won't slow down your user's machine. Your users don't have to upgrade their computer to get it. You don't have to fumble with the license server to give them access to your thing. It's automated with bots, and it gives them automated Discord roles to go with it. And it's on a server, which means nobody will see your code ever but you, not even me. Your indicators are safe. So that's what we created for the marketplace. And it's not just selling indicators. We've created similar technologies for newsletters, for Discord rooms, for alerts, signal services, everything. We have a solution for everybody's business. I just went ham on telling you guys the cool thing for the indicator side of the business. So hopefully, yeah, futures, bro. I'm glad, F2, I'm glad that you like that, because to see like another person like you who makes cool shit, the idea that we have a house for you to put it in and keep it safe. Hopefully that makes you a little excited about it. We'd love to show you. And the proof of concept is rockets here. You've been watching the stream for a while. This is calculated and broadcast from the server. These are calculated and broadcast from the server. These are calculated and broadcast from the server. This is calculated and broadcast from the server. All of our tools, DD bands, actually DD bands are local, but this is calculated and broadcast from the server as well. So the UI element, this is just being local because we grabbed this and draw it. But the everything else is fully, all the walls, all the hedge pressures, redistribution, all of this is calculated, broadcast from the server. So we created this technology in 2020, and we've been doing it ever since then. Pain point for me was, how can I code my indicators without how can I open a bakery, and for every time someone buys a cookie, I have to hand them the recipe with it? They're gonna come back to my bakery, they'll go home and make it themselves, right? So why? And it's because nobody built their trading platforms in the last 10 to 15 years with an ecosystem in mind. Mine from the start had an ecosystem in mind. I knew that traders would need a home to be able to get their tools and products to market safely, securely, and I'd have to fumble. There are people who are like landlocked in the NinjaTrader or PineScript ecosystem or TradingView ecosystem because they created their business inside of that. You're landlocked. You can't maneuver. You're limited by their technology. So like with us being cloud-based, WebSocket stream, you're not limited by any technology. The platform is web-based. NinjaTrader, the indicators are local. Calculations are done local. You have to download files from a shady person's website and install them on your computer and hope there's not a virus on them to steal your crypto. Who knows? Like that's all these problems that you have in these other ecosystems. TradingView can't handle complicated indicators because the browser can't calculate that much that fast. You also suck at marketing. You actually trade, don't even market your tools. You keep your word of mouth. Yeah, I know, man. Well, with your stuff, the cool thing about Marketplace is that our goal is to market everybody that's on there, to help them get visibility, because it's a trading ecosystem. We have millions of people visiting that site, every month. So the idea is that you have people that will see your stuff in a trading only sphere of folks. The screener I have, okay, just to kind of go into it a little bit, the screener I have, as we build more products for vendors, the screener itself will be programmable by you, and you can actually sell your scanner settings. Like this is what I quote unquote programmed on the console for myself. I could sell this list of things as a product, subscribe $5 a month, whatever. And you can have my scanner settings here. If I went to add and I go down here, it says add, search in Marketplace, I can go by your scanner settings and add them here as well and customize my input. That's the whole point. Rowan, you got your EdgeClear account? Awesome, man. Happy for you. Yeah, so the idea is that like alerts, scanner settings, indicators, call outs, all of those will be able to be monetized in our ecosystem, in our marketplace. So an example, if I were to scrap Rocket Scooter stuff and make it the base price with nothing, I can charge for my indicator, I can charge for a certain widget, I can charge for alerts, I can charge for my scanner settings, and each one of those can be like a $5 or $10. So people can like piece what they want. Some people here may say, what, I don't use any of this. I don't need that, but I do need this. And then you can go get it separately. So the idea is that like in TradingView, you can only buy indicators, right? But in the Rocket Scooter ecosystem, you can do indicators, alerts, callouts, and many other things. Imagine a text feed right here where all your favorite gurus you're subscribed to, their plays are just feeding to you in a text stream. Oh, you can't see because the mouse is here. Imagine here. Again, these are some of our cool ideas that we have. You subscribe to me and Ashton and I don't know, I'm making some names. Trades I'm at. Stock Talk Weekly, all of them. And each one of them, you buy their callouts package. And you just get a stream of text like that just feeds like Matt bought ES at 30.50. Patrick TSCR bought Apple calls at $40. Like you can just get a feed of everybody's call outs like that. Barky. Yeah, Barky, dude. Barky has his own feed on here. Right. So you can go to the marketplace and subscribe. So you can see everybody that you follows trades or call outs. What data could connect to your platform from the vendor standpoint or from the user standpoint? What do you mean what data? The platform already has the data in it. You don't have to do anything as a coder. The data is already supplied to your users. For futures, we use CQG. CQG futures. Yeah. We want to open the door to do Rhythmic at some point. The problem is we have to recreate a lot of our things because TradingView is not compatible with Rhythmic. So we'd have to basically create our charts from scratch and our DOM and other things from scratch, or create a conversion tool to snap the APIs together to convert Rhythmic's API output to a CQG output and make them similar. That was discussed, which we might actually do to get Rhythmic in there. Rhythmic's a necessity because one of our future products is going to be trader funding programs to be traded through our platform as well. I mentioned something about not liking Bitcoin. Why is that? Like, and which thing I didn't like about Bitcoin? In trading or fundamentally as a thing? And then we'll get out of here in the stream a little bit. Am I launching a prop? No. But all your prop firms will be able to be traded through Rocket Scooter as well. So like your Apex and Elite Trader Funding and Top Step and all of that, you'll be able to actually trade them here with a rhythmic connection. Like in our platform. ZS monthly map. Okay. To answer your question, Ben, Bitcoin does not serve any current utility. If it has some kind of utility as an investment product, it's not realized yet, and so therefore it's only building on hype. And usually you want to invest in something in the hype phase, knowing that the utility phase is coming up soon. The internet in the 2000s was a great investment, but there were 2 market crashes before the Amazon era of your life started, where everybody does everything on the internet, called the Amazon era, right? So you had to survive 2 crashes before you became an investment millionaire buying Amazon when it was still a bookstore. So now you have to think about, you're buying Bitcoin at the time where Amazon is just a mild bookstore and a sea of crap. Internet companies that didn't do anything. You're trying to strike gold on the one thing that's going to survive of the tens of bajillions of crypto coins out there, which is the one that will be the Microsoft, the gold standard crypto. And when does that become the gold standard? We don't know. Government is a lot of hurdles, political hurdles. I'm gonna tell you something. The Treasury and the governments, investment banks do not want, sorry, central banks, but the government especially does not want decentralized. They don't want to know where money, they want to know where money is at all times to fight crime and make you pay your taxes. They're not going to want decentralized anything. So it's a huge hurdle to turn this into like a global currency that makes Bitcoin the billion-dollar idea that it is for you as an investor. Problem to me is that as an investment vehicle, the finish line is not anywhere soon. Just like the internet took 20 years to finally realize its full potential and make your investment worth it. Bitcoin is not even close to being at that phase. The technology is there, but nobody uses it. And it's just kind of like in that weird infancy stage. So I don't touch it for that reason, because I feel like there's a lot of other more appropriate investments at the time, like the stock market, like blue chip stocks in general, that can gain a whole lot of money in the investment side of things. And in a trading sense, it's just illiquid. And it really is just a complicated product to understand its catalysts and movements, because it doesn't have direct reasons to move. It's tethered sometimes to the index. It sometimes, like, its movement is usually because of its illiquidity. There's not a lot of active traders on it like there would be on a stock. A lot of times its movement can just be randomness because people are getting in and out of positions. It's hard to trade. That's why. I don't think we seem to be in a minority. I think if you walk down the street and knocked on the next 10 doors you see, half of those people have said, 90, like 100% of those people will not own anything related to Bitcoin in their investment portfolio. Maybe 1 out of 100 people might buy that risky diversified product that includes Bitcoin in it. Who knows? But 10 out of 10 people will not invest in Bitcoin. 10 out of 10 people aren't trading Bitcoin. 10 out of 10 people, maybe 9 out of 10 people probably don't even understand it. Maybe 1 out of 10 people will be like, yeah, it's the future. It's such a, it is a minority thing. Maybe not in the trading community. Everybody talks about it all the time, but in real life, it's still at that Internet? Is that the thing that's inside a bathing suit? The internet that keeps your goodies secure when you swim? No, that's not the internet of your bathing suit. The internet. It's a thing where computers talk to each other. You can do stuff. Really? I think my niece has that on her computer upstairs. We're still at that phase of Bitcoin, right? Nobody knows what the fuck it is. So, like, in human sense, people are like, oh, I've heard about it, but that's about it. When they invert like this, typically, when you get to expiration, monthly expiration, a lot of times stocks can do this. This has to do with just this particular instrument. When this happens, and it happens around the third Friday of the month, which the 15th is that third Friday of the month, it's okay. After the third Friday of the month, it's going to reset itself to be normal. This is just how the hedging is structured on this. This is illiquid setup. So when you have bull zone over bear zone, it's liquid here. It's illiquid here. This indicates that right now, beyond what we call the iron wall, where the monthly options expire, it is perceived to be very volatile with a daily range of that. So that's about a 5% move up and down. And some of this volatility is seen right here. See how volatile this stock has become just as of lately. So people are typically hedged up until the current month. Anybody that's hedged over the next month, you can see that calls are in the money and puts are in the money right now for a month out. That creates volatility now. So all that tells you is that you're expecting the market to be volatile now. And it's very uncertain how things stabilize after monthly. So usually you look up to the monthly expiration and don't try to look past it. If they flip-flop like this, that is normal. It just means there's not a lot of people trading this thing and hedging this thing for targets a month out. It's a very illiquid stock relative to current conditions. So it's very liquid here. You got bearishness here, bullishness here, and that this is your common spread. Here, it's like people are now buying puts in the money. People now are buying calls in the money, right? That's going to create volatility a little bit now because it's far away, but you don't usually see this mechanic here. Usually just see this mechanic at monthly or later. So if once you see this, case in point, just say it's going to be volatile now and ignore it otherwise. But great question. So it's illiquid. And you can see that a lot of this probably came from whatever caused that. Yeah. So for the most part, just ignore it and say it's going to be volatile. Here, like in anywhere you are, puts and calls are both in the money. Like if price was here, you still have puts and calls in the money. If price is here, you still have calls and puts in the money. So it essentially is like infinity, right? You're going to have pressure on both sides and it's illiquid at the same time, real time. Here, you have bear pressure only for just this particular expiration. It's liquid here and bull pressure's up there. So you don't have a lot of bull pressure right now on this expiration. So when you approach monthly and you go to that next Monday, I promise you these will flip-flop and be back to a set. Once people roll out of this month's expiration and roll into the next month, these things will flip around usually. And it's just a phenomenon that you see with a lot of stocks. So it tells you that you have no visibility beyond the monthly expiration. There's that Nasdaq target we talked about. All right, guys, we love you. We'll see you later. You'll have a good one. Answering some of y'all's final questions here. Oh, here it is. Connect Discord to site, but still not. I'm not a member. Okay, so just F2. Just go buy the go get the extended trial F2. Just to get you into our back end, if you don't mind. Just go to the website, click extended trial, sign up for it, the 35. Just get you in, and then that'll get you in the Discord and get you some rolls and everything, and then just $35. Yeah. Okay, cool. Love you guys. We'll see y'all later.